Welcome to World of DaaS, a show for data enthusiasts. I'm your host, Auren Hoffman, CEO of SafeGraph and GP of Flex Capital. For more conversations, videos, and transcripts, visit safegraph.com/podcasts. Hello, fellow data nerds. My guest today is Jonathan Levin. Jonathan is co-founder and chief strategy officer of Chainalysis, a blockchain analytics company, which is valued at over $4.2 billion. Jonathan, welcome to World of DaaS.
Thanks so much, Auren. Great to be here.
Now, you run a super interesting blockchain analysis company, and you're sorting through like tons and tons of transactions, helping businesses, financial institutions, governments understand like how people use like cryptocurrency and other types of tokens. But blockchain, in some ways, it's a public ledger. So did you just start by like doing some deep analysis on the publicly available data? Is that how it started?
Yeah. So, maybe I'll rewind a little bit and give people a little bit of background about myself. So, I came across cryptocurrencies over a decade ago while I was studying in Oxford, looking at sort of the economics behind cryptocurrencies. And what I realized at that time was, the blockchain, as you say, is this open record of transactions that anyone can look at. And that was kind of an economist's dream. And so, when I looked at it, I said, well, there needs to be someone that understands the most about how and why people are actually using this ledger. And so the ledger contains all of these transactions, but it doesn't actually, say, which entity was putting those transactions into the blockchain. It doesn't say, what the purpose was behind these transactions. And so being able to label that information was really the challenge that everyone had. And so that was really the starting point of Chainalysis, was to say, could we be the company that really understands the most about how and why people are using this technology? And can we label really the data that's publicly available that everyone is interested in, with the context about which entities put those transactions
And
there.
how important is it to go all the way back to like T0 on a time equals zero on a given cryptocurrency, whether it be Bitcoin or Ethereum or Solana, et cetera? Or is it okay to just start at some period of time?
Yeah, so it's a really good question, and I think it gets into sort of the data half-life discussion, depending on what data business you're in. I think the thing to note about blockchain in particular is that the actual existence of the transactions that people could be interested in are going to be perfectly preserved for all time. That is the thing behind the technology that blockchain does really, really well, is preserves all the records for all time, so that someone 20 years from now could refer back to a transaction that happened 10 years previous to now.
And assuming really, that particular coin doesn't go away or something like that, which sometimes they may.
So sometimes they may. Oftentimes that record, even then, is still even if it goes down to almost zero usage, there'll be a copy of that ledger somewhere existing in like an archive that someone will need to go dig out in sort of a sci-fi film. But the point here is that that information is always there, which means actually that it actually extends the half-life of the information that we collect, because the information we collect is ephemeral in nature, because knowing which entity was around at the time 5 years ago, say, transacting, that entity may no longer exist in today's world. So if we were there at the time making a collection from that entity at that point in time, that data is now no longer available to be collected.
And what you're talking about, just to help with the audience, so you're somehow mapping these wallets to real life entities, or as much as you can. You're trying to get, maybe it's fragments of that real life entity, but you're trying to get some sort of data points about those wallets. Is that right? Yeah,
that's exactly right. I mean, I would say that until today, and just let's use Bitcoin as sort of the canonical example, is most of the transactions that exist in the Bitcoin ledger have been put there by services that individuals use to, transact,
like a Coinbase or something like that.
Like a Coinbase, like a BitPay to pay for goods and services. So you could be trading. But all of those transactions, therefore, are being put there by services, and those services have come and gone over the history of Bitcoin.
Right.
And
Mount
so,
Gox is no longer involved. Right.
yeah.
Yeah.
So if you're trying to collect the Mount Gox wallet information today, you can't,
Yeah.
because Mount Gox is no longer around. And so we have, a very large sort of effort for the last 7 years, really building that comprehensive collection mechanism to collect all of this ephemeral data, and building that database of which of those services have put which transactions in the blockchain.
And how do you incent those services to work with you? Because it's a bit of a data co-op, I imagine, right?
Yeah. So initially, like, we had no incentive for anyone to participate in the data co-op, which is kind of the chicken and the egg problem that all businesses face. And the interesting thing, though, we had was, well, we had the ability to go out and use these services ourselves and start to create accounts at all of these different service providers, and then understand which of our transactions, how did they show up on the blockchain, and
okay.
and then start to run like pattern algorithms over that, so that we could capture most of the activity ourselves, and then go to these customers and say, well, hey, we've already mapped out the wallet that you have and a whole bunch of wallets that you're interested in. Do you want to use us to be able to
so it's a bit like how Plaid gets started, where Plaid is essentially starting out like scraping these banks, and then says, hey, the bank, it would be much better if we just did an API between us. Okay.
Yeah. And I think that though we have something maybe additional there, which is not just the convenience and the trust that gets built by an API integration. Like, actually, these businesses need us to identify money laundering risks on their platform. And so, they have a real utility to, to stay in business if they use us for compliance purposes, which allows us to then get data rights on which transactions they're processing, because they really need us across all the other entities that they're transacting with, and they need to understand what their customers are doing with their crypto.
Interesting. And you have a lot of different types of customers. One type of customers is doing things for compliance. You have another type of customer that might be doing things for like law enforcement or something. In compliance, I would imagine the bar for being accurate is super high. Like, you really want to make sure it's high. Whereas in law enforcement, it's like, might be okay if you gave a lead with 20% accuracy, they could like run down the lead or something, right? So how do you balance those different types of needs for accuracy?
Yeah, so actually, the interesting thing about the accuracy for the government, and you're right on the sort of lead generation side of law enforcement, but actually we get used all the way end to end in these investigations, where you're not just worried about, show me some potential avenues of investigation. We're actually all the way used down to really proving beyond reasonable doubt that someone gained financially from a set of activity, and that's a very high bar.
Good. Okay, that's a beyond reasonable doubt. Okay, so super high.
So that's a super high bar on the accuracy front, on the law enforcement side. But you're right that, like, even within our law enforcement customer base, we have these different stages of an investigation where you want to dial that confidence level up or down, depending on like whether you're looking for more leads or whether you're looking for being able to prove to a jury that someone has gained has gotten ill-gotten gains. So I think that we tend to think about providing sort of a very, like the high, I don't know how to say this, but instead of like the lowest common denominator, the highest common factor, right? Is like, we think about like making sure that our ground truth data and the picture that we give to all customers is at that very high bar of confidence, and then start to think about more behavioral analytics around the set of ground truth data that we can give people sort of the lower confidence decision making potential for those types of use cases. And you're right on the compliance side, but actually also we're starting to power decisions that the business is taking. So if I'm a company allowing users to buy and sell crypto and take it on and off my platform, I'm interested in what my competitive dynamics are. are they moving their money off my platform to a platform that has, a certain set of features or stuff like that? And so those entities, the accuracy there is not important.
Yeah.
Completeness is much more important.
Okay, that makes sense. And how do you obviously, like Bitcoin? Everyone knows Bitcoin, but how do you decide like which going into any new, let's say, blockchain or any new coin is probably going to be a very expensive fixed cost for you? So okay, there's Bitcoin, there's Ethereum, there's Solana, there's okay, but then how do you know which one to go into? Is it just driven by your customer demand? Like customers like, I really care about the coin number 52 or something?
Yeah, so we have a bit of a range here. I think one of the things that we've done over time is really matured sort of our approach to this, where actually, to your point about the different use cases and needing certain different things, we've actually managed to create a solution where we actually have a very low cost of supporting new coins for really just risk screening. So
I got it. So like kind of a quick and dirty,
quick dirty check like that. Like we've had to really lower our cost of what we call coin acquisition down to virtually zero, where you're
just like ingesting the ledger and doing some basic analysis of it.
Yeah, okay. and even before we do that, we can even start to tag up addresses, even if we don't even have the underlying.
Because often it came from a Bitcoin wallet or Ethereum wallet or something like that. Usually, to start some of these, it's coming from some other wallet somewhere else, right?
Yeah, or someone reports to us now. Like we have, scam reports that people send to us and pieces of information that our partners give us where we say, okay, well, we'll flag all of those in case anyone else in our network is checking those transactions. And so, we've had to really lower that for that use case. Now, to your point, like when you get to the sort of level of sophistication where it needs to be in all of our products at full support, then we discern sort of, where customer demand is and also where we think the market is heading. So we look at sort of where is the majority of economic activity happening in these blockchains, like looking at the number of transactions, looking at the total outstanding value of these coins, looking at those types of metrics to guide sort of how we're thinking about that for the full support at the top level.
Interesting. And then when you think about Bitcoin, you're really talking about a relatively small number of transactions that are high value transactions that are happening. Whereas, you could imagine scenarios with other blockchain systems where you're going to see much, much higher volume of transactions with lower dollars because the transaction costs potentially are lower. I can imagine that could change the way you do analysis. Like, how are you reacting to that?
Yeah, it's a fascinating part of the industry, right? I think like, if you look at the last 10 years of crypto, we've sort of spent the time building, what you could call like financial primitives and, really, creating an asset class, which to your point has sort of seen a massive appreciation, and a lot of the activity is centered around, stores of value and like very high value transactions. I think what you're seeing today in crypto is, sort of an opposite trend, which is, using some of those financial primitives, you're now seeing people build marketplaces of art and, music rights distribution and ticketing and lots of consumer applications, which to your point is definitely going to need sort of consumer internet scale behind it. And we do think that over sort of a medium term, that's something that Chainalysis needs to be well equipped for. And so thinking about how you deal with what people call like high throughput blockchains is something that we've sort of been working on for a couple of years.
Especially if some of these things happen off chains. Like if you can imagine a scenario where they're going to be doing tons of transactions, you might do it off chain and then you might settle it on a block or something like that.
Yeah, and I think for us, we've been very focused on sort of the unique attributes of the blockchain, which allow us to build the business that we have, which is we're very interested in providing analysis on where you have the same set of transactions that everyone in the world is interested in, right?
Yes.
And that's really the core value proposition. as soon as people start moving information off chain, which even happens today in crypto, there are definitely interesting use cases there, but we tend to stick away from them because we're fully about how do we provide the best context for the set of transactions that the most people in the world are going to be interested in.
Okay. Yeah, that makes sense. Now, one of the things I love about Chainalysis is that you're this data co-op. Data co-ops have a lot of like winner take most properties to them. If you're going to give advice to another company starting a data co-op, because they're really hard to get going, like what advice would you give to another company? What are some of the non-obvious lessons?
Yeah, I think from my perspective, the non-obvious thing is that you do need to have some sort of compelling reason why someone is going to enter this into you. Like,
Yep.
don't take this with rose-tinted lenses and say, well, if everyone did this, then this would be an amazing outcome.
Right.
Like it actually needs to,
because it's hard to get it for number 1 through 100. It's very hard for them to get started. They're not getting that much value back, right?
Very, very hard. And I'll tell you that, like, even as you scale a company and like we look for new use cases today, I have to push back on that with our staff all the time. It's like, but really tell me why giving us this piece of information is a required capability that the customer could articulate to you.
Yes.
Like,
okay.
and
why are they getting a clear benefit from sharing this? Why is this really helping them? Okay, got it.
Right.
Yeah.
And then, so that's one lesson. I would say the second lesson for me is that very, very difficult to do this if you don't have any sort of external lever that you have control over, that you're able to push into this data co-op model.
Yeah.
Right. So the analogy that I would have is like, if the business that you're starting really depends on you going around to 25, 30 businesses, and everyone needs to pour out what they've got in the data silo into the middle, you're going to have a really hard time doing that BD work.
And historically, like a Verisk or something, the way they did that is they were like started by these companies or something. Right. And they actually owned, or Visa or something. They owned a piece of the company.
Right. So being able to construct that model is like probably the hardest thing to actually get done.
Top down, where you're like the CEO or something, right?
Right, exactly. So instead, like look for angles where you definitely want to do that, but that you have some form of outside information that is valuable to the co-op that you can dial up and down depending on how much extra effort you need to have done. Like a good example would be like, okay, in a new sort of cyber fraud co-op that you want to start in a particular region of the world, how do you think about like getting some data sets that maybe a lot of the people in that co-op already have access to? How do you get it to them cheaper? How do you provide some form of extra analysis on top of what everyone's using today that makes the data more valuable, that then allows you to then create some incentive and also some trust factor with those entities to be able to do that. With us, like it was super straightforward. Like there was this resource that was in the middle that everyone was putting information in already, and we managed to feed it back to them with this extra analysis that we were doing ourselves.
Okay, so let's just riff. So let's say you and I on the side, we're going to start a new company, and we're going to build a data co-op, or we're going to build a data company to help companies understand days outstanding for all their new customers. So every time you need to get a new customer, we tell you the average days outstanding that everybody has for this. So let's say you get Ford, and it turns out Ford pays their bills a lot faster than General Motors or something like that. And we try to like connect to everyone's GL. Like, what advice would you have for the founders of this company to like get that moving? Because it's going to be hard to get people to give you connection to their GL.
Yeah, so I would say like this, like let's figure out who are the big bill payment companies in North America, say. Let's go
QuickBooks or something,
or let's go to Bill.com. Let's go to the actual payment. Let's go to Bill.com, because like Bill.com's business is in becoming more ubiquitous. And they're getting more customers. They're not really in the business of providing that sort of as a analysis. Data product. As a data product to merchants who are needing to get paid, although I'm definitely going to give that back to the Bill.com people when I next speak to them.
We just increase their value like 4x on this podcast.
Yeah,
totally.
Yeah, exactly.
Everyone invest now.
Yeah, I'm gonna send it to the CRO. So the way that and they're killing it, right? So but the way I would think about it is, are there some even anonymized and aggregated forms of information that you can go and uniquely collect from maybe a place that people weren't thinking about before, in order to then go and say like, hey, like, can we do a benchmarking study on your GL, like, versus like what we're seeing in the general market, and show like, hey, I've managed to uniquely connect this like interesting benchmark, and want to make sure that you might have some room here to maybe open up some free cash flow, or do something that someone could do. But that would be my first approach: is go to find like a unique source of information where possibly people aren't using that today, and run some analysis, and then walk around the market and see who's interested in that set of information.
All right, cool. Now, historically, like venture capitalists like have been a little bit wary of data companies, and raising money has historically been difficult for data companies. I know for Safegraph, when we raised our Series B, like we had a great outcome, but it wasn't easy. Like a lot of VCs said, oh, I'm not interested in data businesses. Now, Chainalysis seems to be maybe proof that this is changing. You guys have raised, I think last time I checked, $365 million, $4.2 billion valuation, which is amazing. Like, how do you see that evolving?
Yeah, so I think that look, we've been through sort of a journey in sort of enterprise SaaS, where VCs have been very focused on, particularly in the VCs that would be focused on these type of companies, very focused on sort of enterprise SaaS multiples, and you've seen sort of amazing outcomes left and right in the enterprise software space.
Yeah.
The thing that everyone in the VC world has to wrap their heads around is how proprietary is the access to information that a data company has. Because like, if that is the primary asset, like there needs to be a really compelling story on not just well, firstly, it needs to be proprietary. Like there has to be a reason why you as a company are the only company that can go out and collect all of this information. And then second, they need to understand sort of like your distribution strategy, and how that further compounds your data advantage. And they'll want to ask like those, they're just not used
like a data co-op type of thing, or something like
a data co-op type thing. And so, and because they're really trying to answer, well, if it is so proprietary and you've got really great distribution, do you also have a long enough half-life to monetize this incredible advantage that you've got today? And those types of questions are just not very natural to investors that have been very focused on net dollar retention, and churn, and sort of the mechanics and measurement of that. And I think if you look at even SaaS, right? I mean, SaaS really born, somewhere in the mid 2000s. And now, like, there were no metrics then to measure like the S1s that were being made. Like, they were like completely new metrics.
Right. Even the ARR is relatively new, or the CAC to LTV, or all the traditional things, efficiency scores, et cetera.
Yeah. And so now you're very 15 years in, you're very conversant in those metrics, and everyone is expected to be able to reel them off. Like,
and we have things like SaaStr and all these other great resources that have been really helpful to all of us, and great bloggers on it.
Totally. And so like, how do you measure coverage? Right? Like, how do you measure
really hard?
Like really hard. How do you measure sort of like what degree of distribution someone has in a market? How do you measure data half-life? Like objectively from the outside. And
also, generally VCs are not good at looking at products, right? If you think of a typical Series B investor, they're going to look at your metrics. They're probably, even in the SaaS software, they'll maybe even not even use the software. They may even not know what it looks like, right? So they're probably not looking at these types of things. And obviously, data is even harder to see. You can't get like a demo necessarily of data.
Yeah, and I think like you know this very well from your go-to-market, but like structuring a data bake-off
Yeah.
between two products is oftentimes how someone's making a decision in the DaaS world, and
That's right.
like that's not really something that a VC is particularly well equipped to do today. So and so what I think about is firstly, we need to, like, each business does need to have like very clear North Star metrics on their own data advantage.
Yes.
And be able to tell the story like eloquently about like why they have proprietary access, what is their distribution strategy, what does the half-life look like? Like that's like, if that is very clear and you can paint a really strong story, I think you can get someone over the hump today, and like people will start to understand it. I think that the thing that we've managed to do very successfully is combine it with then enterprise software metrics that we've owned some of the workflows associated to some of the decisions that people take based on our data. And this is where, like, obviously everyone's business is very different, but I said, we need to really own also the workflow around investigations when it comes to crypto. Like no government agency in the world should want to investigate cryptocurrency related criminal activity without the use of our product Reactor. No one in our compliance world should want to, really be able to like monitor for money laundering risk without actually using our APIs to screen their transactions. And so those things have helped us paint this story of like, look, the real story is the data. We are a data company. We've amassed this incredible advantage, but ultimately, and we will choose which of these workflows we need to dominate over time as they become big enough markets. And as we can see, like, people are super sticky in workflow when it comes with the addition of proprietary data.
Yeah,
they get used to having at their fingertips.
Now, pushing back on the proprietary thing a bit, like if you think of ZoomInfo, which is probably the most successful data company that has been started the last 15 years or so, they sell business contact information that could just be seen on it's basically what you see on a business card: the name, the title, the phone number, the email address. It doesn't seem like that proprietary per se. Now they say that, well, we have more accurate and we have more breadth than anybody, and that's probably how they get a lot of their customers. But there's probably other ways to piece it together. So how do you think of like that type of data business?
Yeah, I think that like it's an interesting question, right? Because like there is a level of proprietary, at least methodology then on the
cleaning
analytics.
The data,
the
checking,
analytics so there can be, but then I think the point is that you're not, I mean, you are obviously a data business, but like you're going up a level where like there's some proprietary analytics that you're able to run that actually other people
or they, at scale maybe matters. And yet it's just like Walmart can buy toilet paper at a cheaper price. Like they might be able to make that marginal next business contact at a cheaper price than other people, and then they could sell it. So scale kind of matters eventually.
But that's super vulnerable, right? So I think that in today's world, and this is why like I think like, and obviously ZoomInfo is an awesome company and has paved the way for like a lot of stuff. But like, you look, if pure sort of engines of scale is sort of your advantage in the data world, you don't have, like, from a VC perspective and from a real long-term sort of 10-year view, you don't have real advantage unless you're able to compound that somehow through distribution or methodology.
And ZoomInfo is now buying applications companies. So you see this movement of some data companies also becoming either creating or buying application companies. It's extremely rare to go the other way. I've almost never seen a SaaS or application company like create a data business. Like, why is it so hard to go the other way?
Yeah, I think it's fascinating, right? Because you would think that I think the reason that it boils down to is that application companies are so nervous about sort of the trust that they have with their customers over the protection of information today, that it's super difficult to risk any of that and go the other way. Whereas if you've managed to amass some sort of data that lots of people need, then you can start to structure your application legal arrangements and data arrangements so that you can actually step into workflow. Like the other way around just becomes very tricky, because you've sacrificed any of those data rights in order to achieve distribution in your application business, in order to just like, sell more. And you're not thinking about it yet as, what could we be aggregating? What could we be selling back as a data product?
But Chainalysis has a very big business selling into government, law enforcement, national security, et cetera. A lot of, quote unquote, Silicon Valley based companies don't often like to sell into law enforcement. To me, that's like kind of a competitive advantage for Chainalysis, because you're maybe not going to have competitors from this like really big company. Like, how do you see that, and how do you see that as part of your mission?
Yeah, I think that like the way I think about it as part of our mission is not actually about business defensibility at all. The way I think about it as part of our mission is that ultimately, sort of, I believe that more and more value is going to be stored and transferred over this technology, right?
Yep.
And I see that as a total inevitability and just a matter of time. The one
certainly it's been happening the last few years, right? We're seeing a massive increase. Yeah,
massive increase. So the thing that could slow it down is governments not understanding what the ultimate potential of this technology can be.
So some bad regulator or something, or
and really, like, you've seen it sort of in the national security space with ransomware and other things, where there can be policymakers who don't understand that truly, like, innovation is the biggest form of national security that we could have.
Yes.
And so, like, we have to think about the way that we set up a regulatory regime for this industry that both protects public safety, but also doesn't compromise on how fast paced and how much innovation can come from this, and how much economic value, but also political power will come from a country like the US, or any country, frankly, being able to foster innovation on this technology. So when I think about our government business, I think about we need to be in many markets around the world, making sure that governments are able to really mitigate the risks associated with new technology, because there are always risks.
Yes.
But also open up the opportunity for people to continue to innovate and build applications that everyone will use.
Now, selling into government is a different selling motion than even selling to a big bank or big financial services. Like, what's kind of the same and what's different?
So I think that it is enterprise sales. So you've got to have a robust sort of enterprise sales methodology where you rigorously.
But that would be the same of selling into a big bank like JP Morgan or something, right?
Exactly the same, right? Like you've got to figure out where budget is. You've got to figure out why it's now. You've got to figure out the paper process. You really need to like make sure that you've got a consistent methodology across your sales team to be able to forecast. The thing about government that's very different is, you've got budget cycles in different countries are going to make your business very seasonal. So you've got to be able to sustain that, and you've got to be able to understand that that's really just how things work. And so the nice thing for us at the moment is we're selling in I think about 65 different markets around the world, and so we're keeping track of those different budget cycles, and luckily they're not all on the same fiscal year.
They not all start on October 1st or something. Okay,
yeah. They don't all do that. So that's sort of helpful. But the point is that it's going to be a seasonal business. It's definitely for the most part, I would say, at least for us, it's a fairly lumpy business, right? We tend to move in through like one unit or one division that sees the future in some way, but now are building up to sort of broader enterprise capabilities. And I think that to that extent, the ability to do land and expand is actually very similar in the government as it is in sort of financial services. In fact, oftentimes it's even easier, because these things are more connected, and it is very hierarchical. It's pretty structured.
Now, the stereotype of law enforcement is that they're not as data savvy. Is that true? And how has that changed over like the last 5 years?
Yeah, I think that there's clearly a massive push on data strategy more broadly within government agencies around the world. I've seen it firsthand, sort of where we started, and people are obsessed with a workflow product that sits on someo's desk that someone
Yes.
is like
Per seat or
per
windows. Yeah.
should we no, should we buy a car, or should we buy like a tool that sits on someone's desk?
Yeah.
Like they got there to be able to think about bringing in software like that. I think the tricky part, and I think the government has gone through at least one, maybe two cycles internationally of what I would call like data integration. Is like they've got a lot of data that they need to make sense of as an organization. If you think about tax agencies around the world, they collect a lot of information, they need to make sense of it. And so there's been a lot of maybe even a decade or so at this point, like people really trying to make sense of that. I think they haven't. I think that the latest trend, the one that you're pointing out, is they're starting to think about like buying commercial data, to think about data outside of their walls, to bring in and enrich sort of some of the things that they've already collected. And that's like that's a whole new frontier for a lot of government agencies, because typically, and this applies across the board, they've thought about like, well, we have a lot of this information ourselves. Like, why do we need to go and ask a private company about it? And the more and more, and this is across different communities, there's a realization that the same like ZoomInfo, we need that type of information as a business to run. And so like the government's also waking up to the idea that there's high value in being able to buy data to enrich their own sort of government applications as well.
At Safegraph, we sell into governments, state or local or federal, and I have found personally that the data capabilities of the people who are working in these things has grown dramatically in the last couple of years, and the people themselves have leveled up. That they've gotten much more data savvy. That they realize the importance. I don't know if you're seeing something similar.
Yeah, definitely, and I think it's also like top down as well. I mean, the thing about
even the decision makers are more data oriented today. Yeah.
Totally. So like if I think about sort of, and we think a lot about trying to get our customers to give us, what are the required capabilities that they're looking at when they come to cryptocurrency investigations writ large, right? Like I'm not interested in someone saying like, I'll have another seat, thank you. Like I want to understand. I really want to understand sort of what are all of the required capabilities that you need, and more it's I need not just an application, but I actually need a data feed. I need an API endpoint that I can hit. I need something that we're going to be able to play with and integrate into some sort of government product. So, we really have seen that transition, and I think it's very top down. So I think that it starts with literally, I've seen sort of heads of agencies actually now get that there needs to be a data first strategy.
Yes.
And that's something that used to be something over in the technology division or over in like a particular shop. You've also seen the emergence of titles of people. I mean, the US Treasury Department has a chief data officer.
It's amazing.
Yeah, right. And so that really makes sense in a world where this is at the core of them being able to achieve their mission.
Now, a couple of questions about just starting companies. So you're a co-founder of Chainalysis and your other co-founder is the CEO. Like, how do co-founders work best together to build an enduring long-term partnership?
Yeah, great question. And I think that one of the things about being, they say that, and I know you know this firsthand, but like being the CEO is very lonely. The way that I think about like a non-founder, a non-CEO founder, is you get put in sort of a lot of utility positions.
Yeah.
That really serve the need for founders to have good relationships, and in that, like, you need to sort of leave a lot of things at the side, and like particularly check your ego and be able to step into sort of some of those roles and play that utility player and run sales for 9 months like I've done this year, and like done some of those tasks to be able to help the company just scale and grow as you build out the executive team and operational functions. I think the other thing that I'll say is that it's important for founders to realize how much they need each other. And it's the mutual need for like thought partnership, and really the sort of as you scale a company and you bring in those executives that have seen the scale of the company before and know how to build the operational rigor to get you to the next level. That again, the thing that you lose the most is the ability to innovate. And as founders, you have an opportunity to not sort of distance yourself from the rest of the team, but really think about together, how do you continue to innovate as a company? And really, like, that will be something unique that founders will share in a language that no one else in the company will ever understand. And
plus, you have the credibility to implement it or something, right?
Plus, you have the credibility to implement it. And so that's something where, like, I think that, over time, just being sort of vocal about that to each other and realizing like what those challenges as an organization will be, like, brings you closer together as founders. And, myself and Michael have definitely over the last 7 years, sort of, your relationship changes a lot, but as you scale, we just crossed 400 people at Chainalysis, and we are starting to think about, well, how do you continue to innovate at the pace that you want? And that's a conversation that Michael and I have on a very frequent basis, as well as with executives. But I find particularly, founder to founder, you can try and solve some of those problems.
And there are companies like HubSpot, Google, Dropbox, Airbnb that have these long-term enduring partnerships between co-founders. There are other companies where the non-CEO co-founders seem to leave once the company gets to a certain level of success. Like, have you learned anything from studying these other companies?
Yeah, so I actually, and I haven't done this yet, so I'm going to announce it here, but if anyone does want to reach out to me as a non-CEO founder, I'm actually going to start a group because I think
awesome. I think
it is going to be.
We get like you and Dharmesh Shah from HubSpot. Yeah. Okay.
Yeah. So I'm going to start a group on it because I think it is a unique experience that isn't talked about enough. And so, yeah, I've definitely had some mentorship from founders in that position before, and oftentimes, it is very challenging, but there isn't, like, there's lots of CEO groups and help for the lonely person at the top, like the person who's sort of helping that person stay above the water and paddling furiously below doesn't oftentimes get the same level of attention. So I want to make sure that we do that.
Okay, yeah, all right, that makes sense. All right, last question we ask all of our guests: what is the conventional wisdom or advice that is generally bad advice?
What is the conventional advice that is generally bad advice? I think, and this applies mainly in crypto right now. But I think one of the things that is happening with capital raising in general, and particularly like VCs talk about this, is like raise more than you have to.
Yeah.
And I think that one of the things that I've seen, particularly in very fast-paced markets, is that there's such a momentum building activity when it comes to fundraising, where you can value your equity more, create some scarcity around it that actually allows you to raise sequentially with less dilution. And the actual act of these funding rounds today, and particularly in a capital rich environment, is like, that's a much easier thing to accomplish than most founders understand. So I think that it's kind of that, like, classic sort of sales technique that the VCs will try and play, but like, actually, I think founders could be a little bit more conservative today and sort of, you know, get lower dilution over time.
Okay, interesting. I love it. That's great. Well, thank you, Jonathan. Really appreciate it. Where can people find out about you on the interwebs?
Well, if you want to learn more about Chainalysis, you can go to chainalysis.com. Being able to spell that is a little bit difficult. So
we have a very smart audience, so I think they can do that. Yeah.
Yeah. And
I think we have the highest IQ audience of any podcast. So yeah.
Yeah. No, I can only imagine. So and you can find me on Twitter. I'm at Johnny JONYLEVIN on Twitter. And
I follow you on Twitter. You're a great tweeter. So yeah.
I want to get back now that the end is in sight for me as leading the revenue organization on an interim basis. I'm gonna get back on Twitter.
All right, I love it. Okay,
and start tweeting a bit more.
Yeah, the hiatus has been too long. Yeah,
the hiatus has been too long. So that's really where to find me. Really appreciate the conversation, and I think that the future of DaaS is extremely bright. And I think what you're doing here, in terms of establishing, what are the ways that people should understand these businesses, is critical for not just fundraising, but actually entrepreneurs building great companies.
Awesome. Well, thank you, Johnny, for joining us on World of DaaS.
Thanks so much.